if the Bitcoin price skyrockets, like when it skyrocketed to 60,000 a coin, people actually do the opposite. They bring online antiquated Bitcoin mining equipment because the break-even point has risen above their cost of energy. And I'm not bothered by the network dynamic because the network is in essence self-healing and organic and naturally healthy. When you take all this in, the conclusion you come to is the network is moving from being energy intensive to being capital intensive, but it's not any kind of capital. It's a SHA-256 hash capital, or another way to say it is, if you didn't have ASICs, you would need a lot of electricity, but the better the ASIC, the less electricity you need per exahash. And in the extreme, if you go out another decade, it'll be all about the ASICs. So the competitive dynamic in the marketplace is shifting from who can get the cheapest electricity and where can they get it, to who can get their hands on the best ASICs.
MicroStrategy CEO Michael Saylor has no regrets in turning his company's stock into a highly levered bet on the price of Bitcoin, even as the cryptocurrency continued its 70% peak to through decline to about 21,000 on Wednesday. In an interview, Saylor defended his actions and said, "I can't come up with a better idea," adding that he feels that his company has a fortress balance sheet because it took out billions of dollars of debt at an interest rate of 1.8%. just before interest rates doubled. Hello and welcome to Money Talks. In today's video, Michael Saylor is back with another outlook on the macro environment surrounding Bitcoin and other cryptocurrencies. He speaks about the role of regulation in Bitcoin space, his opinion about stablecoins and altcoins, and what will the future bring for Bitcoin. Make sure to stick around till the end of this video where Michael Saylor addresses margin call concerns on MicroStrategy's massive Bitcoin position.
Because there's still a lot of people in the crypto market that think that somehow Bitcoin is a risky thing to hold as long as Tether might crash or as long as UST might crash, right? And, maybe they're not wrong in the near term. Over the long term, I don't think it matters. But in the near term, when there's instability with a digital currency, it creates instability with a digital commodity like Bitcoin. The meltdown of Terra kind of introduced an entire generation of crypto bros to the idea that there is a difference between a security and a commodity. Everyone wants to treat these things the same, but I noticed people on crypto Twitter tweeting that we need more disclosure from all those coin teams, et cetera. It's kind of a laughable thing because, of course, the whole point of a security is securities have risk factors, and that's why you have to take the company public, and that's why you have to publish 100 pages of disclosures, because the only way you can ethically and properly promote a security is when you make full and fair disclosures. So I think these meltdowns will accelerate the transition of the industry to appreciate that securities need full and fair disclosure, and most of all the crypto tokens are all securities.
Michael Saylor also responded to fears that a part of the firm's Bitcoin holdings purchased using debt could be liquidated. In this interview, Michael Saylor says a margin call is a highly unlikely given the Bitcoin position MicroStrategy acquired using debt is adequately collateralized.
So there's a never-ending parade of those milestones. Each one of them seasons the asset class or matures it. And as you can see, it's 2, 3, 4 years of excitement, followed by another 4 years of people just working their way into these positions. But I think by the time we get to the end of the decade, you'll have 90% of the regulatory clarity people would like, and you'll see a much broader base of public companies and institutional holders and institutional supporters and organizations that are that are maturing or providing support for the entire network. So really what happens is as the Bitcoin price comes in and as the network gets more competitive, as the hash rate grows, if the hash rate doubles and the Bitcoin price is cut in half, it squeezes all the miners running antiquated equipment or the third generation equipment. And they'll just get squeezed off the network when their break evens or when their electricity cost, is above the break even point. And you would expect that, you almost have like these bootleg miners that are sitting in jurisdictions where they're literally getting free electricity. Like in China, it wouldn't surprise me that there weren't miners getting literally zero cost electricity. They were given the electricity by the province as local businesses. So occasionally you'll see some of those businesses continue on old equipment. But if you're operating in Western Europe or the United States or North America, any main Western regime, then anyone running on obsolete equipment is just going to shut down in difficult times. In really, really good times.
In a margin call, a trader or investor is required to put up more funds to avert the closure or liquidation of a leveraged position. The MicroStrategy CEO says most of the enterprise analytics software firm's debt is manageable as it was taken out before interest rates were hiked. As for the company's balance sheet strategy in general, we borrowed $2.2 billion at a blended interest rate of 1.8% before interest rates doubled. If you had a chance to grab $2 billion at 1.5 interest, it seems like a reasonable thing to do, and I'm glad we did it. Most of it is unsecured debt. 1.7 billion of it is unsecured. The 500 million comes due in 7 years after we borrowed the money. So we feel like we have a fortress balance sheet. We're comfortable and the margin loan is well managed.
The Bitcoin miners are fighting a battle to defend the network 4 years into the future. So the network is perfectly secure now, and it's possible the Bitcoin miners will be attacked, but Bitcoin will be fine. And of course, if all of the miners are attacked everywhere consistently for a decade, then we probably have a problem, right? But if there's an infection of the Bitcoin mining network and it's affecting 5 or 10% of the miners, and it takes 2 or 3 years to run its course, right? The network simply, reconfigures itself to better power sources, to more reliable semiconductors, and to more reliable political jurisdictions in order to maintain the security and the integrity of the network over the long term. So, summary, owning Bitcoin is easy. Running a Bitcoin mining company is hard. The Bitcoin miners pay in capital and stress, right? They pay with their attention to duty, right? Continual operational engagement in order to provide the security and the integrity of the entire Bitcoin network. If you want a full-time job fighting in defense of Bitcoin, then you become a Bitcoin miner. And if you want to retire comfortably and not worry about your money ever again, you become a Bitcoin hodler. And they really are two extremes, right, in one ecosystem. And of course, they need each other. But it would be a mistake to think that owning a Bitcoin miner is just the same or as safe as owning the Bitcoin. It isn't. Right? There's potential upside and there's potential downside. And it's easily, if it's 1,000 times as complicated, I might be understating it.
Investors don't seem to agree with Saylor's assessment, as the firm bonds are trading well below par, and MicroStrategy's current market valuation of $1.9 billion is well below the market value of the firm's Bitcoin holdings, which stood at $2.7 billion as of Wednesday afternoon. MicroStrategy had purchased 129,219 Bitcoins at an average price of $30,700. That means the firm is currently sitting on an unrealized loss of more than $1 billion. But Saylor is still optimistic about the outlook for the price of Bitcoin and said it's still one of the best performing asset classes when you zoom out far enough.
I think it's more important for us to focus upon first order issues. The first order issues are just understanding the difference between digital commodities and digital securities, and the impact of legislation like the Lummis bill, how it will impact the entire crypto industry. And even more important than the legislation is, the most important thing is just educating the general public on what is Bitcoin, and why is it a rational thing. So the education will drive intelligent regulation, and the regulation of the asset class and the normalization of the asset class will accelerate institutional adoption. And in the periphery, you'll see various provinces jockeying back and forth on the periphery over these things. And you can fixate on them, but probably they could be a distraction too if you're not careful.
So, what are your thoughts about margin call concerns on MicroStrategy's Bitcoin position? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video, and thanks so much for watching.